do you see the market like right now? Do you feel it cooling? Do you feel it?
Well, it's more seasonal right now.
Okay.
December and January are
Normal
the
seasonality then?
cooler months. It basically is a bell curve, and summer months, because of school, that is when a lot of homes come on the market,
Sure.
and that's when a lot of buyers are moving. So just historically, summer months are better to sell and more inventory to buy. And so, we're sitting mid-January right now, and so it's one of the slower months. And when we bought our
How
rentals,
do inventory levels look now compared to
low
times
inventory.
in the past?
It's very similar to last year, but our inventory is so low. I mean, there are people just scrambling just to get a home, and they'll do whatever it takes to get it. And sometimes it makes financial sense, and sometimes my sellers will say, what are they thinking?
Yeah. Someone close to me about a year and a half ago needed a home and was trying to find something in the suburban Denver market for less than $400,000, and there was not a whole lot. They managed to squeak one out. I think you know who I'm talking about. And now that's gone up 34%.
I know.
So now it's trying to find something that's below $500,000 as the entry point.
Right, and who would have thought that $500,000 would be a starter
Yeah.
home? But that truly is what it is in the Denver metro area. And, we have several counties in the Denver metro area, but it really is. You have to pay over $500,000 for a starter home.
Yeah.
Now, then there's the condos and townhomes, and homes single-family homes are about 2/3, 69%, and then townhomes are about 31%. So not quite 2/3 and a third, but most people want to buy single-family homes.
Well, I know you've seen a lot. You've seen ninja loans back in the no income, no job or assets, 120% valuation that they were, the Community Reinvestment Act, that they were having banks give on properties. Well,
Yes.
Of course there was a bubble and it blew up
Yes.
in 2008. Things are high. Do you think they're toppy? Do you think there's an impending doom or bubble right now? I know you've talked about equity a little bit.
Yes, well, we all thought it was high, and then we had the shutdown, and we thought, oh, it's going to tank the market, but it did just the opposite. It actually, the last 2 years have been the highest sales in the last 10 years.
Any clues? Do you think it's people just wanting to get out of apartments and get single families? Or?
Well, and there's a couple of things. I think a lot of people can work from home, so they're like, if I'm going to be working from home, we need a bigger home. Or if I don't have to be in this city to work, I want to live where I want to live.
Well, the interesting thing with the businesses is the whole pandemic, or whatever you want to call it, it accelerated so many things. There had been a long, steady trend of more people having flex time, working from home or whatnot, and the companies were always so hesitant. It's like, oh, no, they're going to be sitting at home, watching the football game or something. But productivity actually went up.
Yes.
Not the drive time, satisfaction went up. Now, there's some people who just are not wired to work at home.
Right.
You got to get up. You can't be sitting around in the fuzzy bunny slippers all day, right? You've got to, I recommend, get up, dress for work like you're going to go to work, and then go into your place of work at home and work, do your job.
Exactly. So it's back to the market. What is it going to do? I wish I knew. I wish I had a crystal ball a few years ago. I would have bought a few more rentals.
Oh my goodness, yeah.
But the millennials, there's a lot of millennials buying homes, and my husband and I look at all of that too, because we've got rentals, and what is our exit strategy? But I think the market, it's dependent on the interest rates and on what's happening in the world. And
so how big of an impact do you think, what do you think a 1% hike in interest rates would do to the market?
Well, it's going to affect the payment, so instead of maybe buying a $600,000 house, someone might have to dial back and do maybe $550,000. I don't know the exact numbers.
So if they can't afford the payment, then they won't be able to bid it up quite as high, and it might offer a little relief on the pricing, you think?
It might, but we thought maybe that would happen last year or the year before, but it did not.
But whoever thought that high, we'd be referring to maybe 4.5%.
Right.
Right? When I remember My family, they built a home in 1963 in New Jersey, and the interest rate was 5.5%.
Oh,
And then they
wow.
sold a home in 1982 or 83. You remember those days, the stagflation, Jimmy Carter's days?
It was terrible.
Oh, it was crazy. And I think it was 14% interest rate was at that
Right.
point.
It was actually 16 to 18%
Yeah.
because we bought our first home and we got first-time home buyer money. And instead of doing, giving money for down payment, that's
Mhm.
what they do now for first-time home buyers.
Right.
They lowered the interest rate, and so we got 13.75, and we thought we had just ripped off the bank. And that was in 1983, and our
Yeah.
house just stayed stable.
And we thought we would
So-
never,
no.
ever again see anything in in the single digits, much
No.
less 5, 6, or 3, or 2.5.
Right, and our value of
Yeah.
our home did not go anywhere for several years, and then we had a downturn in '89, but then it started going back
Sure.
up in the '90s.
Yep.
But-
Let's see. So what the sweet spot right now, it was interesting. You were showing me some graphs where the starter homes in the middle of the curve is around 500,000 right now. But it's interesting because it dropped off, then there was a blip then in the 1 to 2 million range.
Yes.
That was interesting. So how can you
Significant.
address that?
So I don't know, more people are willing to buy those $1 million to $2 million homes. And usually people have kind of this, I don't want to go over $1 million. It's kind of in their mindset. But just in the last year, the $1 million to $2 million has moved faster than the 8 to 9 and 9 to $1 million.
That's really interesting.
And
yeah.
then the over 2 million is not very much because there's a smaller pool of buyers who
Do you
can
think
buy
it's
that.
people are getting overly confident that, well, if we're going to buy 8 or 9, we may as well get $1 million home?
Right.
You know?
Well, and plus the pool of buyers for that $1 million, because I had buyers looking at 800 to 900, and they're like, let's just bump it up to C.
Mm-hmm.
And they found so much more because not the pool of buyers for that $1 million is not as strong. There's not as many buyers, and so there again, supply and demand, and
Yeah.
so that I think had to do a lot with that.